Hello from Trend Signal for a review of the data and events of the week beginning the 29th of July. A very important week for the markets. We've got data out this week that rank as certainly the most important data of the month, if not for the last 3 months, really. After months of speculation about whether the US will cut rates, we're about to find out. Not only that, we've got our own monetary policy committee, the rate setting committee for the Bank of England, also meeting. Japanese central bank, non-farm payroll. A very, very busy week with lots of key data. We'll start with calendar from Forest Factory Monday. Having said it's very busy, there's not a lot. Quietest day of the week on Monday, with little to report in the way of data. Boris Johnson is continuing his Brexit offensive, his unionist offensive, with a visit to Scotland today. Not sure whether he's going to get a worse reception from Ruth Davidson rather than the Scottish Nationalist Party, but time will tell. But he's certainly keen to express his unionist credentials, so he's right on it. Anyway, sterling obviously slightly under pressure against the euro and the dollar, although the dollar is particularly strong across the board anyway. Tuesday, let's get into the calendar then. Japan, we have the first central bank meeting of the week, the Bank of Japan's monetary policy meeting, expected to keep rates on hold and maintain guidance as they have done for months and months and months. We then have US consumer confidence reading, a rebound from last month's number, something that the Fed will obviously take into account. Rebound from last month's number is positive and a good, strong rebound at that, if that's how it turns out. And better reading, as I said, a better reading for Fed watchers. How that will influence the Fed, time will tell. Wednesday, we have manufacturing and services PMIs from China. With everything else going on, this may not have a lot of impact unless it's a shock, of course, but it's published by the state, so the chances of a shock are highly unlikely. Um, okay, EU inflation data on Wednesday. That is CPI flash estimate. Going in the wrong direction, really. Stronger number would help the euro and would help the European Central Bank, but I'm afraid it doesn't look like that is going to happen. 1% reading is expected from 1.2 previous months. We have ADP, non-farm employment change, on Wednesday as well at 1:15. This is the private payroll company that has its own take on employment in the United States. It's taken less and less importance more recently and can be quite choppy, but a rebound from its previous number, although its previous number was nothing like the Bureau of Labour Statistics number in the official data. So read into that what you will. And Wednesday, the main event of the week, the main event of the month, and the main event of the quarter, which is the FOMC meeting. This is the rate setting committee from the Bank of England. Bank of England, what am I talking about? The rate setting committee from the Federal Reserve, the US central bank, nothing to do with the Bank of England. The comments over the past 8 weeks from Jerome Powell, the chairman of the Federal Reserve, and other members of the rate setting committee makes a rate cut an almost certainty. This will be the first cut in rates since the financial crisis back in 2008, December 2008. The big question is whether the Fed will cut by 1/4%, that's 25 basis points in city speak, or 0.5%, 50 basis points. The CME countdown to the FOMC, their FedWatch tool, basically tells us that there's a 79.1% chance of a 1/4 point cut, i.e. down to 200 to 225 basis points. It's currently 225 to 250, and only a 20.9% chance of a 1/2 point cut. So there you have it. It's highly likely to be just a 1/4 point cut. If for some reason the Fed cut by 0.5%, then obviously the dollar will fall quite sharply and equities will likely rally along with bonds. The next meeting on the 18th of September, whilst we call these meetings monthly, they tend to skip some months. There is a 55% chance that there will be a cut again to 175 to 200 basis points, with another 12.9 actually thinking there could be a half point cut. So there's effectively a 68%, 69% chance of a rate cut in September as well. So it all depends what our the press conference after the event on Wednesday evening at 7:30. The press conference, Jerome Powell, what he says and what guidance he gives. It's all the nuances in the words and the press statement and what's actually said, as much as what actually is announced at 7 o'clock. Okay, Thursday we have our own monetary policy meeting. This is the rate setting committee of the Bank of England. Got it right this time. No chance of any move ahead of Brexit, deal or no deal. We also have the Bank of England's inflation report. This is all sort of merged into one as it has been for several months now. Carney, like Jerome Powell, Carney will be speaking after the announcement with an official his sort of press conference. Mark Carney there speaking. More doom mongering, some people feel, but no doubt. But he can only say it as it is. That's his job as the governor of the Bank of England, the central bank in the UK, to provide that analysis. Sterling remains pretty weak on the crosses against sterling. Against the dollar, say on Monday morning as I speak, it's already touched 123.34, which is sort of really a combination of a strong dollar, but a slightly weaker sterling as it's falling against the euro over the last couple of days. Headline grabbing move nevertheless, and that's really what happens. It tends to add to the bearishness in the market when commentators and journos report it that way. US in the afternoon we have on Thursday. Let's jump to Thursday. Yes, it is Thursday. What am I talking about? ISM manufacturing PMI. This is a gauge of manufacturing sector, and again, after the FOMC, this is going to have little relevance in the way the Fed will have had wind of this particular number. I suspect a slight pickup in manufacturing activity. And it's all a bit sort of not meaningless, but the Fed have already made their decision the night before. A little bit like the main event, one of the main events of the week, the non-farm payroll data in the United States, unemployment data to you and me. We're expecting a rise of 160,000, and the Fed will know this data as well from the Bureau of Labor Statistics. After a strong report, you'd expect some sort of slight pullback, wouldn't you? Headline employment rate, well, that's maintaining a multi-decade low at 3.7%. And average hourly earnings, there's still no sort of major pickup. And this is one of the reasons why the Fed will be able to cut rates as inflation remains fairly benign. A pickup in average hourly earnings could signal a rise in inflation, but I think there's no chance of that for now. At least the bond markets seem pretty clear in their opinion of it as yields fall lower and lower. And that's it. That completes it. Thanks very much for listening. All the best.
If you would like more information about trading the right way, Trend Signal is giving you the opportunity to see and hear about its services live at a free online seminar. Take a look at the Trend Signal website for the latest events and to book your free place.